Hello everyone. I hope you are doing fine. Thanks for joining, guys. Really appreciate it. Give me a second as I will be sharing the link in Gem Hunters chat. So let's wait for a bit more people to connect. How are you doing, guys? Can you please let me know if you can hear me on the chat? Where are you looking at us right now? Loud and clear. Awesome, Victor. Thank you very much, brother. Docu Earth. Thank you, guys. Let's start. Okay. So, basically, today, what we're going to see is an introduction, guys, into how to create a Bitcoin, a crypto portfolio. All right. So, today is not necessarily about the charts themselves, okay, but rather about how to create a portfolio, right? So we're going to see different criterias and several things that I personally use to manage my portfolio and all that, you know. So okay, we can start now. So basically, the first thing to understand, guys, is that the crypto market is a crypto market is a secular market. Okay, what do I mean by secular market? All right, this is something that needs to be understood. If you guys have any idea of what is a secular market, then just leave it on the chat. We will discuss it. Give me a second. All right. So basically, a secular market is a market that plays in big trends over decades. Okay, powered by deep-rooted fundamentals instead of like day-to-day noise. All right. So let's put here the description of a secular market. So big trends play over decades based on strong fundamentals, not day-to-day noise. All right, that's extremely important to understand. Oh, let's put it this. All right, perfect. Okay, so we might have like explosive bull runs in the way up, and in the way down we might have like brutal bear stretches, but the real story is how price ultimately overshoots in one direction. Okay, it resets and then grinds for years, basically. So it's always important taking this into consideration. Okay, taking this into consideration, it's always important, okay, to keep the long term lens in mind, always. Okay, keep the long term in mind, always, in order to be able to actually, you know, stay in the game. Because if you are only playing the short game here, the short term gain, well, you might gain it, but are you here for the long run, or are you here to make a couple bucks and then leave? Because basically both works, but at the end of the day, you need to know where you're heading, right? If we see, like for example, over here, if we see at the monthly trend on Bitcoin, let's say on the not even on the logarithmic, all right, just from a normal perspective. If we see the monthly trend, I have never seen, to be honest, like I have never seen Bitcoin breaking down a bullish market structure on on the monthly chart. Like a normal market structure, bullish, is like this. And that's exactly what we have in Bitcoin. If we go to BTC USD index, that's literally what we have in Bitcoin, like since the beginning. You see, literally no low has been taken, never. This high was taken, but we created a new low here, new high, new low, new high, new low, currently creating new high. So I don't see in Bitcoin something like this, where we shift market structure on the monthly range. So that's why I'm implying here that basically we need to keep the long-term lens in mind always. Okay, when you're feeling in doubt, make sure that to see what's happening. Yeah, these pullbacks might be brutal, like 70%, 80% on like Bitcoin and Ethereum cases. For other altcoins, you're seeing 99% pullbacks. But at the end of the day, what's your goal? You see? So that takes us into understanding, all right, what's your investor profile? Okay, what's your investor profile and how to take advantage of it, right? So let me put here, okay, let me just take this, move it to the top, right? So let's put it this way, investor profile. All right, so now I need you guys to ask yourself some questions first. Okay, this is the most important thing to ask yourself, guys. We have 5 different questions in order to be able to understand what's your investor profile. And the first one, okay, is why am I investing? Why am I trading? I would love to see some responses from you guys on the chat. Okay, freedom. To grow my money, okay. To make bags of money, all right. Okay, they are valid. What else, guys? We are like 20 people connected, so let's push those answers. Make money, okay, freedom, financial freedom, time freedom. Okay, perfect. All right. So that's why you are investing. That's why you are trading, right? So it's freedom, it's money, it's wealth preservation, it's many other stuff, right? So what I do recommend to you guys right now is that you take on a paper and a pen and start writing this down. All right, everything that I'm going to share today, please write it down so you have a better understanding on how to do the things we do. Basically, either it's on trading or either it's on investing, because basically trading is just an investing branch. Okay, it's just part of the game. The whole game is money, investing is a branch of money and trading is a branch of investing. All right, so the next question we need to ask ourselves is how much I can commit. Am I talking about money here, right? How much you can commit to trading or how much you can commit to investing, right? And for answering this question, you need to know that whatever you commit into investing or into trading, you can afford to lose. All right? Hear me well, guys. You can afford to lose that money in order to multiply it. Why is this? Because sometimes we start trading or sometimes we start investing and we start using like necessary money that we need into our day-to-day lives into this because we expect good results. And that's not how it's done. Only from a psychological perspective, that only adds up more pressure to you, okay? And from a risk management perception and perspective, is not good. Is not good, because you should be committing, okay, only a fraction of what you earn into this. Because I'm pretty sure, okay, I'm pretty sure that you guys have jobs. I'm pretty sure that you guys have some saved money and all that stuff, So how much money you can commit, you see? So start writing it down, guys. Start writing it down, because this is how you build your investing plan. Okay, now third question. How often will I add capital? Okay, for example, if you are a long-term investor, you can add $100 of Bitcoin on a weekly basis, on a daily basis, into your portfolio by DCAing. How often will you add capital? Is it weekly? Is it a payday? Or is it only seasonal? Like only on bear markets, I will add capital into the market and then profit from the bull markets? Or are you constantly DCAing into markets independently of either if it's bullish or bearish? You see? So this is an extremely important question, because if you write down, okay, I'm only going to invest my money on bear markets, then you need to get the hell out of right now, because either you invested on the previous cycle, like in the previous bear market, and you are now very profitable, okay? Or you just started. And if you just started, then you only plan to invest money on the bear market, then wait for that bear market, Get yourself some preparation. All right? Then let's look at the fourth question. What's my time horizon? This is both for trading and for investing. You see, if you are trading, and you're looking at the monthly chart and you expect to take a trade based upon the monthly chart on the 1 minute chart, then you are completely wrong, because you know how many minutes there's in a month. It makes no sense. If you're trading from the 1 minute chart, you're scalping. And for scalping, you can't go above the 4-hour chart. You can't, because you are playing the day-to-day noise, basically. Well, the people that look at the weekly chart or looking at the monthly chart, they don't look at the daily noise. They just take decisions based upon fundamentals and chart structure. That's all. Okay, so what's your time horizon for investing? So are you planning to leave your money invested in Bitcoin, for example, over decades? All right, that's nice. Are you planning to buy today and sell in 3 months? Okay, that's also valid, right? Are you planning only to do it on a cycle basis, like what I told you already? Like, I will only add on bear markets and get out on bull markets. That can take about, let's say, 4 to 6 years. You see? So what's your time horizon for investing? What's your time horizon for trading? That's something you need to ask yourself and write it down, because if you don't know this, then you're just playing around. Because if your time horizon is from here to 10 to 20 years, then, man, if you go ahead and buy Bitcoin right now and you expect to have 100x right away in a couple weeks, other way you are not in a good investment, then you are completely wrong, because your time horizon is to check those $100 in 10 to 20 years. You just put it down in a cold wallet and don't look back. It's easy as that. Okay, and now this leads us to our fifth question. Okay, how hands-on will I be? And this is absolutely correlated with your time horizon. You see, like, Are you going to be an active trader, like, I mean, daily, weekly? Are you going to be hybrid, for example, like swing trader and occasional day trades? Or you are going to purely buy and hold? Or you are going to play the cycle, scale during fear and trim then in euphoria? You see? Like, how hands-on will you be? If you are here for the decades, if you are here for investing in like 10 to 20 years, then there's no need for you to check prices every single day, every single morning. Most of you might have jobs, even. Like, you need to adapt your trading style and your investing style into your trading lifestyle, into your lifestyle overall. Okay? If you have a 9-to-5 job, which is completely fine, 99% of the people do it, okay? Don't feel bad about it. Everyone needs it once in a while. Okay? If you do have a 9-to-5 job, then it's going to be impossible for you to intraday trade or even scalping. Okay? If you have a 9-to-5 job, then go for swing trading and long-term investing. Long-term adds up, guys. It just needs you to be patient. If you go ahead and learn about Warren Buffett's strategy, okay, how he is now a billionaire, right? It took about like 50 to 60 years, if I'm not wrong, for him to get there. 50 to 60 years. Now, if you take into consideration this, all of the billionaires, like 95% of the billionaires, okay, and millionaires around the world, they are old, like 50 plus, 50 years plus. There are small exceptions of that 5%, by which some of them come from money family, okay, and most of them possibly win the lottery. They bought Bitcoin or let's say Dodge at less than 1 cent or whatever. This is kind of let's call them glitches, okay, like Luke Ballmer says, okay, glitches, something outside of the normal. All right, so yes, that doesn't mean that you can't be on that 5%. If that's what you want, you can, okay, but at the end of the day, profits and money is made on the long run. It's kind of contradictory because we don't have 1,000 years to live, each one of us, you know. It's kind of contradictory, like this game life is kind of contradictory because we don't have all of our lives to accumulate and make money to then enjoy it as we were like 20 years old, okay, but that doesn't mean that you can do it. And the goal is to build generational wealth, all right? Generational wealth, meaning that no one else in your family will be in the need for work. That's completely different from you thinking that you want to buy a Lambo on next week when Bitcoin reaches 150K. So set your expectancies and set your priorities, guys. All right? So now that you have written down what's your investor profile, all right, let's start designing the portfolio. All right, and I'm going to share things with you that I do, okay? I'm not going to share things that I don't do or that I don't apply. All right, so I know this works, guys. I want to give you guys, okay, a context check first, beforehand. Okay, let me check the chat to see if we have some questions. Okay, we don't have any questions right now. Let's continue. I'm going to give you a context check, guys, just for you to understand the game that you are playing. Okay, Bitcoin, all right? Bitcoin Bitcoin, BTC, which is the least risky asset in this space, least risky asset in space, in crypto space, okay, has compounded roughly around 150% per year for over 12 straight years. This is literally the average return on Bitcoin over the past 12 years. So for every dollar you put on Bitcoin, you are basically securing 150% of your dollar. Okay? In traditional finance, in Wall Street, with a 10 to 15% performance, it would literally put you in the Hall of Fame. 10 to 15%, and you're telling me that in this space we are expecting 150% minimum from the least risky asset in the crypto space, Bitcoin itself. Okay, so now you know a very special data number, okay, that will completely change your mind about how you're doing things. Because I know you guys are trying to pick that like grand slam that is going to make you 1,000x in let's say a couple weeks. I know that you guys are looking for that. And to be honest, yeah, that can happen and you should look for it, but that only needs to be done from a totally different perspective than you think. Okay, and I'm going to explain it to you. All right, so keep this in mind, guys. Bitcoin, the least risky asset in the crypto space, has compounded roughly around 150% per year for over 12 years. That's insane. That's insane. And this context check, okay, guys, this context check is for you guys to set realistic expectations. Set realistic expectations, guys. Like the 1000 moonshot exists, yeah, but timing a bottom to top, right, is literally just a lottery. It's lottery math, it's gambling. And you are not here for the gambling. If you are already paying for education, if you are paying or you are taking your time to see these kind of streams, okay, it's because you want more. You want to know how to do things. And that's what sets you apart already. You are out of that 90% that just thinks of opening a Binance account and depositing $1,000 and then getting that into some shitcoin, expecting some good result. Okay, so set your expectations clear, guys. Set realistic expectations. Many people come into the market searching for that $1,000 opportunity, like that $1 million opportunity, $1 billion opportunity. Like, don't get me wrong, it can happen, but that's literally pure gambling. And the chances of you getting it, the chances of you timing it perfectly to buy the actual bottom and then sell the top is almost 0% chance. Okay, go for it, but understand the probabilities. All right, so in this context check and these realistic expectations, I'm going to leave you with the following, guys. Okay, I'm going to leave you with this. Would you rather have 0.1% shot, okay, at $10 million, or a 95% shot at 100K? Write it down. I need your answers. Let me know your answers on the chat. Let me know your answers on the chat, guys. Waiting for you. Okay, so high percentage wins, right? 95% shot at 100K, definitely. 100K means nothing to me, but 10 million is life changing. Yeah, it's life changing, but you only have 0.1% shot at it, and you only have one choice. Because I'm pretty sure that with 100K, you can make up to $10 million. And even if it doesn't mean nothing to you, it can mean a lot to a lot of people that they can start a business with this. You see? Or start trading or start investing, because it's easier to get to 10 million with 100K starting capital. Patience is key. Absolutely. Exactly. Like, but the 100K is almost guaranteed, guys. And that takes me to the next point. Like, yeah, like 10 million could be life changing, but unrealized P&L can accumulate 10 million. Okay, so the market, this takes me to the next point. Like, the market answers that for you every single day, guys. Edge plus risk management beats lottery tickets. Trade accordingly, invest accordingly. Okay, because that you want to make life-changing money, then compound the money. It's easy. Like, the easiest way to make money is compounding it. Okay, because there's just numbers. It's like you put it into a calculator and just compounding every single time you hit a bottom. Okay, and the market is already telling you that you can earn 150% per year. Okay, only on Bitcoin. Only on Bitcoin. All right. So now we're going to start building the portfolio. All right. So for this, we need like portfolio diversification. Okay. And the easier way to filter your portfolio is between high risk assets and low risk assets. Okay. I don't think there's in between, like medium risk assets, because you are either conservative or you go all in. You know, you go with high risk, high reward expectations. Okay. Oh, sorry. So basically, we can divide these segments into stacks. Okay, so I'm going to draw here this. Okay, and we are going to build 3 different buckets for your portfolio. We're going to build 3 different buckets for your portfolio. So we will have buckets here, right? We're going to have here like typical percentage allocation, right? And the last one, it's basically the goal that you want to have on each one. Goal and risk management. All right. And from these buckets, we are going to divide them on 3 different buckets. All right. So we will have 1, 2, and 3. All right. For the first one is the core. Okay. And the typical percentage allocation for the core should be, all right, it should be no less than 80%. Okay, 80% allocation, at least on the crypto space, on Bitcoin and Ethereum. Okay, there's no other asset, literally. There's no other asset right now on the crypto space that aligns, okay, with the litmus test. And I'm going to show with you guys what is the litmus test. All right. So litmus or legitimacy test. It's basically the same. All right. So the legitimacy test, okay, is how to filter coins. All right. It's how to filter coins based on these principles. The first one, okay, it would be product market fit. Okay, does the token, does the company, does whatever you want to invest in, does it has a product and a market fit? Does it has real world usage, right? In 4 years, not months. Like, you don't come to me and say like, oh, this new token is working and there's like 1,000 people using it over the past 3 months. No. I want something like, hey, this product has been working for over 8 years now and there's 100 million people using it. That's kind of the thing that I'm looking for, you know? Then the second thing you want to consider, all right, is the network effects. And what do I mean by that? Okay, is that either people or protocols now depend on it. Now, tell me on the space which L1s or money systems were not built by Bitcoin blockchain, were not built on Bitcoin essential code. And now you tell me which L2s or any kind of blockchain that hasn't been built essentially on Ethereum. All right. So protocols need it, protocols depend on it, and people depend on it and need it. All right, because there's already 100+ million people using Bitcoin and Ethereum. All right. Now the third one would be battle tested, and this is like it has survived at least one full bull bear cycle without imploding. Okay, and I have seen Ethereum and Bitcoin doing the same for at least 3 bull bear cycles. So it's battle tested. All right, and the fourth one would be the decentralization armor. Okay, so there's literally no single choke point for regulators or hackers to get into it. That's the legitimacy test. And that's why the 80% of your allocation should be here. Okay, because you are secure that you will have at least 150% return per year on these two assets. Okay, so what would be the goal in risk management? Okay, what will be the mission for you? Please write it down, guys. Like, for example, for me on Bitcoin and ETH is DCA every month or week according to my earnings. Okay, DCA every month or week, and my time span for these assets at least is 15 years. So I'm DCAing constantly, and I don't care about them in at least 15 years. So that's my goal in risk management for these two assets at least. Let me know more. Which ones are you setting up on your own, guys? Let me know in the chats. Which goal and risk management would you add here for the 80% Bitcoin and Ethereum allocation? The core. The core of your investment portfolio. Okay, no clue? No worries. Okay, so another would be play the cycles. Okay, that's one. That's two. Yeah, that's two of them. Third one that I'm thinking is swing trading. But for swing trading, guys, and intraday trading on these two assets, beat the benchmark. Are you able to produce more than 150% per year trading these assets? If you do, then go ahead and just done DCA. You know the best entry points for these assets, then go ahead and produce more than 150% on these assets. It's possible trading, yeah, it's possible, but you need a killer strategy for this. So if you don't have this, then it's better off if you just put your money in and let it rest, basically. All right. The next bucket is basically, give me a second. I'm seeing some answers on the chat. All right. So the next bucket would be the growth bucket. Okay. And in here, basically, you can allocate between 10 to 15% of your portfolio. All right. And we are going to do this with selective mid caps with strong fundamentals. Strong fundamentals. Okay. No less than $1 billion market cap. And the goal of this portfolio alone, okay, the goal of this portfolio alone is either swing trading, okay, or spot holding, or spot trading, all right. And the goal would be to recycle. Okay, what do I mean by recycle? Is that basically what you want to do is every time you start making some money from this, basically what you want to do is put that money in back to the strong core. Okay, so let's say you invested 15K into a mid cap, then it turned into 50K. Then you take that back, those 15K back, and put the rest on Bitcoin and Ethereum. That's how you do it, not other way around. And something that is important, guys, that many of you won't consider, okay, is that basically, all right, you need to measure, okay, you don't measure the gains on the growth bucket to USD. All right, you don't need to compare the USD gains to it. You need to compare it against the benchmark, and the benchmark is basically your core. So whatever you are doing on growth, if it's not producing more than 150% per year, then it's better off back into the core. So that would turn into a 90% core. You see, like, if you are not being able to, with these mid caps, with this blue chip, with these NFTs, with this whatever, okay, if you are not making more than 100% per year, then just put your money back into Bitcoin and Ethereum, and then just sit down and wait, because otherwise you're just wasting money. You're just wasting time and energy that can be used to produce in other type of businesses, because crypto is not the only space to become a millionaire. You can do it in e-commerce, you can do it putting yourself in real estate, you can do it in a lot of other markets out there. So if you are spending your time swing trading or spot trading or intraday trading for your growth portfolio, okay, you should make better. Like, you should be doing more than 150%. Otherwise, just put the money back into the core. All right. And the last bucket, okay, the last bucket is just speculative. And this is where you are going to look for those 1000x moonshot. All right. And for this, you only use between 5 or 10% of your portfolio. All right. And this is basically searching for moonshots and then recycling. If you make money here, okay, because I'm pretty sure you can make more than 150% per year in this speculative side. Only on one good thing it can make more, a lot more than that. But then you need to turn that money back into growth or into the core. All right, so it goes basically like this. Whatever you do in a speculative, you put into growth. Whatever you do in growth, you put into the core. And in the core, you don't have to do anything but just wait and see how your money multiplies over the years. That's it, literally it. Okay? So, one key about this, guys, is that basically you have to measure the performance against the core, not USD. Please don't measure your performance against USD. Why is that? Because if a trade can realistically outpace like Bitcoin and Ethereum growth over time on a risk-adjusted basis, recycle the capital back to the core, literally, because it's where it's belong. Okay, because in why this matters, guys, because 150% average annual growth, that's what BTC has delivered over the 12 years. So capture even a fraction of that and you literally outclass Wall Street, what I told you already, okay? And if you don't do this, nothing hurts more than riding the crypto roller coaster literally early and then ending up with zero because you went all in on shitcoins. All right? So stick to the plan. Easy. Stack BTC, stack Ethereum, DCA relentlessly, and let the speculative slice be exactly that, a slice. Moonshots are literally fun, but wealth is built on the assets you know will be here the next cycle. So play the long game. All right? And so we need to understand, okay? We need to understand the importance of allocating into low crypto assets, into low risk crypto assets and high risk crypto assets. Okay. And for the speculative side and the growth side, because both of them are on the risky side, right? These both are risky, guys. Let's put it on red so you don't forget. Growth and speculative side are risky. Okay, so now in order to advance, we need to set the rules on how to allocate into high risk plays or assets. Okay, let's put it that assets. Okay, how to allocate into high risk assets. All right, so you have bad your core gains. Now it's time to tiptoe like down into the risk curve. Anything outside the Bitcoin, Ethereum side, altcoins, NFTs, inscriptions, whatever, like new rabbit hole crypto Twitter invents lives here. Okay, this sleep is where the 50x, 100x, even 1000x it's built. Okay, but most tickets literally expire worthless, and 99% of these assets will nuke 99% of the time once the music stops. Okay, so please keep in mind the following rules. First one, play in your lane, guys. Play in your game. Play in your lane. Invest where you have gene edge, like where you think you have an edge. If you're a gamer, then grind Web3 games. If you're a DeFi native, then live in the pools, like play your lane. It's not the same. You might think it's crypto only, but crypto has a lot of markets inside. So play in your lane, play where you have the edge. Second of all, and I will put it this way, guys, because I know that you don't do this, because I used to not do it. Okay, so do the damn research. If you do it, okay, the crowd won't. Like reading docs and testing dApps already puts you in the top 5% of the diligence. All right, so do the damn research. Analyze the coin. Analyze what you are putting your money into, because even if it's only 5 or 15% of your money, it is something. And the goal of an investor and the goal of a trader is to take care of the money, not to win money. So that's completely different. Okay, now the third one would be touch the tech. What do I mean by that? Is that use the apps, break them, judge them. I mean, you will quickly spot the influencers peddling vaporwave around like the crypto space just because they are getting paid. So if you want to invest in something, then use it. See how it works. Not just because I saw a nice web page and like, oh, this project is interesting and I think it has a lot of potential. Yeah, but have you used it? Is it even usable right now? You see, like touch the tech. Now, point 4. Okay, concentrate to compound, guys. And concentrate to compound and diversify to defend. What do I mean by that? Like if you have a smaller bankroll, so play fewer high conviction bets. Okay, use it as like literally, like you don't go ahead and invest in 100 different shit coins just because you're waiting for that moonshot. No, do the research, because if you have $1,000 worth of this portfolio allocation, those $1,000 are going to be better at something that it's very likely to explode, that divided into 10 different assets. That's why, like, concentrate to compound. And then when you have a lot of money, then you can diversify to defend, because you want to diversify only when you want to take care of your money and you want it to slowly compound over time. Okay, so build conviction, size up, and then monitor relentlessly. Number 5. Take profits, guys. You are never entering near cycle lows or exiting into cycle tops. Okay, you are not going to catch the perfect bottom. You're not going to catch the perfect top. So take profits. Trail your stop loss if you have one. Whatever works best for you. But believe me, you don't want to be in the position in which you have made a shit ton of unrealized P&L and then turn back off the screen, go back to it, and 30 days later you have nothing and possibly in a loss. So take profits. All right. And the last one, but not least, which is basically this one over here. Okay, which is measure the performance against the core, not USD. So, for example, if you are investing in Ethereum and in Solana, then measure it against Bitcoin. If you are investing in the Ethereum ecosystem, L2s, then measure against Ethereum. If you are investing on the Sol ecosystem, then measure against Sol. Okay. So, because this is basically because dollar gains can literally fool you. For example, if ETH rips while you're back is stagnant, you are underperforming the core, not winning. So dollar gains can literally fool you. Remember, this is the crypto space. Bitcoin is king. You need to measure stuff against Bitcoin, against the core, not against USD. If you want to measure things against USD, then go to the equities market, go to the forex market, go to the commodities market. Well, not even the commodities, because in the commodities, gold is king. So you need to measure against the benchmark. Okay? Let me know, guys, if you have any questions. As for now, the stream is almost ended now. And the last thing that I want to touch upon with you guys, all right, is the cycle adaptive ratios. And I'm going to say to share with you adaptive ratios. I want to share with you guys what I normally do. All right. And this is really easy, to be honest. We have the market phase, in which we have bear lows, or basically bull mania. Okay. Here we have the market phase, and below this we have bear market and bull market, right? And then we're going to divide this into 3 sections, basically: crypto, cash, and equities. So we have here crypto, cash, and equities, or, well, it can be and or commodities. All right. On a bear market, you want to allocate 60% into crypto, 30% in cash, just to buy those dips, DCA, 10% on equities and or commodities. On a bull market, you want to allocate 30% into crypto, keep 60% on cash, and same here, like 10% on both equities and commodities. So this is called the cycle adaptive ratio. All right. So this is how much you deploy into it. Like you have a cash buffer for emergencies or future bear market with traditional assets like equities, real estate, commodities, etc., and your crypto stack with your core, with your growth, and a speculative cores. Okay, bucket. Sorry. Okay, guys. So at cycle lows, risk to reward is insane. So basically, you can pour a lot more money into crypto. And in euphoric highs, like you can flip the script, basically. Bank 60% in cash and keep like some dry power for the next reset, and some to buy the dips as well. Okay, guys. So I hope this is useful. Let me know in the chats if this is actually useful for you guys. This is for today's stream. Let me know if you have any questions. Otherwise, I will see you next week. Amazing, legends. Nice to see those comments rolling. All right. So definitely, this is how I manage things myself. So I wanted to share with you guys. We're not talking about charts or anything right now. Next week, we're going to see some market update in order to check how the market's doing. So definitely good. I hope you guys find this useful and use it on your own. All right. So have a good one and see you next week. Bye bye.